What is up, guys? John AG checking in. If you are viewing this stream live, you chose one of the most insane opens I have witnessed in decades, since the metals markets are not just climbing, they are going nuclear. And that the terrifying bit, this is not some retail pump. This is not Saturday speculation. This is exactly the scene when the entire globe begins losing faith in fiat lies at the very same moment. It is Thursday, January 22nd. As you were dreaming, gold rocketed past $4,700 and silver is hovering in the low to mid-90s. No joke here. I looked at my charts during the dead of night and my mind just screamed, "All right!" The rails just came off. But before we move any deeper, a small ask. The data tells me a massive portion of viewers are here daily, yet you still have not joined the tribe. If you find worth in my content, smash that button immediately and write Team John AG down below just so I see you stand with me. Okay, listen to the plan for right now. I am about to link 3 disasters that seem distinct at first glance, but deep down they are fueling one beast, a total collapse in sovereign bonds and in money backed by those notes. Number 1. The political earthquake that is rocking European and American commerce ties. Number 2, the treasury strain that is silently morphing into a worldwide cash nightmare. Number 3, Japan. Correct, Japan. Screaming a warning so intense it is shaking the whole planet. And once we get past that, I promise to tackle the issue that actually counts. What occurs now? What is the manual the big banks always grab? And what regular folks must do prior to the new wave striking. Since there is a new stage, and it is nearer than the masses, assume. Let us begin with the news pandemonium. The White House is now ramping up aggression regarding the Greenland situation and threatening levies on numerous EU nations. Brussels naturally is plotting retaliation and crisis summits. This directly threatens your wealth. Wall Street survives. Terrible updates. It even withstands horrific data. The killer, however, is erratic chaos, particularly emerging from the planet's economic engine and the printer of global reserve cash. Uncertainty is jet fuel, and striking a match near leverage doesn't spark a fire, it detonates the system. Many experts are calling this the great dump the USA signal. Global money is fleeing American markets because they despise the swings, the hazards, and that inflation stench. However, you need to look deeper. Forget the emotions. Look at the arithmetic. The U.S. is hitting a massive refinancing cliff. Titanic sums of loans must be renewed at whatever brutal rates the lenders suddenly dictate. When faith trembles, the cost to borrow spikes instantly. That is, yield the cost of belief, the price of faith. If buyers ghost your paper, you must bribe them to return. So whenever rates start soaring, realize the message is that investors demand huge premiums to keep the fantasy alive. Here is the hidden nightmare. Despite endless chatter about ditching the greenback, foreign powers still hold massive piles of U.S. treasuries. This isn't a clean, sudden crash where everyone sells instantly. It is far deadlier. It is a creeping rot in sentiment, a steady reset of danger while liabilities keep exploding. If you want the scariest warning sign, look at the interest. When a government starts burning cash on interest, payments that rival the budgets of massive federal agencies, that is not just a line item. That is a financial black hole. Because once interest becomes the biggest line on the expense sheet, the state has exactly 2 choices: slash the spending or find a way to pay up. And politically cutting spending is a complete myth. So the only real option is paying for it with massive new borrowing, endless liquidity, and complex financial tricks, which ultimately guarantees more money printing one way or the other. This is why gold and silver are moving like wild animals let loose from a cage. Now I know exactly what some of you are thinking. John, the Fed can just cut rates and fix it. Listen to me. The Fed only controls the short end of the curve. The bond market owns the long end, and long-term investors do not care about one tiny rate cut. If they see inflation, risks and volatility dangers exploding. That is why you can get rate cuts and still watch long yields refuse to drop or even spike. And when long yields spike while debt is renewing, it is exactly like refinancing your home every few months, except the loan balance keeps swelling up. And the bank keeps hiking the rate. Now stop for 2 seconds and look around. If you are a pension fund, a bank, an insurance giant, or a retirement plan, you hold bonds. You hold safe assets. You are forced to own them. So when yields rip, bond prices crash, and the paper value of safe money vanishes. Most people do not feel it right away until they do, because that is where stress bleeds into balance sheets, into liquidity, into margin calls, into forced selling. And that is why I said before that something broke. Sometimes it is not one huge explosion. Sometimes it is like a piston shattering the engine block. Listen, hold this nightmare scenario in the front of your brain as we advance. If interest rates continue soaring, the first sign of total chaos won't be breaking news on the greenback. It will be urgent alerts regarding functioning exchanges, interim aid, or monetary safety nets. These expressions are the warning sirens. Once they appear, it implies the pipes are about to burst. You absolutely cannot be the individual scrambling for a lifeboat after the tsunami crashes down. That covers the states. However, the true horror is that this infection is spreading worldwide. If it were only America, the globe could pivot to Europe or Tokyo as a secure bunker. But here is the catch: Europe is weak, and Tokyo is screaming danger. Focus on the East. For generations, that nation was the silent pump, driving cheap international loans. Their interest stayed rock bottom, forcing capital to flood away from their shores to everywhere else. Snapping up government debt, corporate notes devouring it all. This constant stream kept global rates suppressed. Today that game ends. Long-duration yields over there are surging into zones that demand immediate global panic, plus they hold a debt burden so colossal that tiny rate ticks trigger massive strain. And as those rates spike, another domino falls. The carry trade begins to collapse. This implies funds that leveraged inexpensive yen to acquire lucrative assets abroad are suddenly retreating. When that cash rushes back, it isn't merely a local issue, it becomes a worldwide cash emergency. Since much of what has buoyed international stocks for years is the belief that we would forever have easy credit available, they were one of the major sources. Now, certain critics are shrugging this off, claiming, chill out, Tokyo's spiking rates won't crash the planet. Perhaps. But listen closely, Japan is the ultimate crash warning. Think of it as the frantic siren in the mine shaft, but this bird is gripping a staggering load of sovereign bonds. When that creature starts wheezing, you quit arguing if it's safe. You sniff the air. Time reveals the cycle. Whenever yield curves break loose, the bankers never just sit on their hands. They act, they erect walls, they pump in stimulus, they execute whatever is mandatory to quit the crash. That is the game plan. They bluff hard until something breaks. Then they twist the money faucets, map that logic onto right now. If Japanese yields go rogue, the official reaction won't be silence. It involves a variant of tampering, purchasing yield, fixing panic buttons, shadow deals, whatever stabilizes the chaos. Now, if you assume collusion is paranoia, answer me this. When the backbone of our money system is leverage and that lever snaps, do you really suspect the elites just sit idly, or do they commit to whatever is vital to keep the game going? That is the million-dollar ask. I need your verdict below. Hurry. If global yields stay volatile, what is the banker's next big play? More pain or massive printing, because your bet on that single point dictates how you safeguard your cash. Let us tie this to hard assets, since you must be asking why gold is exploding upward. Here is why. These assets are far more than commodities, serve as the harsh global verdict on financial trust. When faith is rock solid, metals lay dormant like a silent fire alarm watching from the shadows. But when trust fractures, metals go ballistic. What we are witnessing now mimics the opening phase of a massive crisis, moving from war zones to bonds and then bleeding into cash. I have to dispute one popular theory currently making the rounds. Pundits claim this is just a run from the dollar. I disagree. It goes much deeper. I see an exodus from the whole paper. Money game. Since every major power is drowning in debt and every central bank is stuck between soaring prices and total collapse, the true refuge isn't foreign cash. The real safety lies in what they cannot print. That explains why gold rips higher even when the dollar rallies. It is not a currency bet. It is a wager on faith. Now, hearing this makes some scream the scary word hyperinflation. Let's pause. True hyperinflation is rare. It requires total economic ruin, failed taxes, and a complete loss of trust. But you don't need the apocalypse to get wiped out. You only need years where your money dies faster than your wages can grow. That is the silent assassin. History proves this well. When the system shakes, gold moves in ways few predict. Silver acts like the crazy volatile sibling. It swings harder, it scares you more, and it pays off bigger. It can crush you or make you rich. That is why I preach strong mental discipline with silver. Now let me hit the burning question. Is the window closed? Is it too late? During a typical boom, your fear is buying the peak before prices can crash down. When trust dies, you panic about being exposed. That is no reason to bet your entire life savings on one asset. You must build a tactic and quit seeing your cash as just pixels in a bank app. You use it as a weapon to survive a dying empire. So if you already own real gold, be extremely wary of selling it for cash on daily swings. This isn't a gambler's game anymore. This is a fortress. Building era. But if you have zero coverage or you have been waiting, this is the final warning. Get real. Because in every major reset, the gate where you can trade paper for real value eventually locks. And when it locks, it doesn't happen slowly. It happens violently via markups, droughts, lags, bans, or a lethal mix of all four. Now, right before we dive in, let me hand you a lifeline. Down in the text below, I added bonus links to help you move now. There is a private WhatsApp group, and there is also an inner circle option. If you want to aid us and unlock the secret vault, and speaking of secret intel, yes, we are launching elite-only videos too. These are not short clips. These are the master files where my special team helps me dig up the truth, the stats, the past, and the ripple effects. Intel that is forged only for serious members who need the real story. Now let's do what the masses won't. Expose the ugly truth. When national debt balloons too big, you finally hit a wall where the controls fail. Truly acting solo is a myth because the state's insatiable cash thirst is crushing the entire financial structure. In this deadly trap, bankers can talk a big game, but they can't keep yields up forever without bankrupting the debtor. And the biggest deadbeat of all is the state itself. So the heat is on to keep those monthly payments survivable. Sometimes they do it with a public bailout. Other times they use a silent weapon, letting the cost of living burn hotter than yields, so the full debt effectively dissolves. This is why I preach about real yields. Gold ignores the printed number. It only respects true purchasing power. If yields are high, but prices are soaring, you are bleeding wealth. And losing money is the ultimate signal to pile into tangible assets. Now I hear the critics screaming, but the official data says otherwise. Fine, let's be real about that nonsense. Even if their massage charts look tame, you feel the brutal reality in your rent, groceries, and bills. Officials can rig the equations. They can swap the goods. They can spin the story. They cannot fix your bank account. When voters feel crushed, they scream for help. And help always means spending, and spending always means deficits, and deficits cycle straight back to massive money printing. See the death spiral. That is why this rally in metals is not just a trend. It is a total paradigm shift. Stick with me right now because the next minute changes everything. In a second, I will expose the two brutal endgames. One is a bleed, one is a crash. And the crash is what gold is pricing in immediately. But first, I need to spotlight Europe. It is the silent accelerant in this drama. Europe is built on fractures, demographics, energy, limits, lopsided growth, and political chaos. When a fragile giant takes a hit from trade panic and tariff threats, it doesn't just talk. It gets forced into desperate moves. Those moves mean stimulus bailouts propping up sectors, pure spending. And spending in a debt crisis isn't free, it's leverage. This is where the violent ending starts to emerge. If major powers simultaneously face expensive debt, the system hits the breaking point. You don't need everyone to default. You just need one massive player to lose its smooth operation. Because this machine is built on collateral. Bonds are the collateral. If the bedrock shakes, everything shakes. And that is why a Japan bond shock ripples into U.S. stocks, euro credit, and even risky markets, not because Japan is the whole world, but because the world is chained together by funding. Now let's reveal the two endings. The slow ending is controlled decay. That looks like policy support, mild recession creeping, prices and hard assets soaring for years. The fast ending is a total trust snap. That looks like a sudden crash where crowds rush to exit the system at the same time liquidity dies and leaders rush in with nuclear options. If you wonder which path we are on, watch the volatility in urgent meetings. When you see leaders and bankers scrambling, that is the fast ending trying to trigger. Now, I want to switch to the style of our squad. Let us hit a hot topic. A fan just asked me, John, since gold is going vertical, do I dump silver? Due to the swings, listen, it really hinges on your why. If you hold metal just to scalp profits, choppy charts hurt. But if it is your doomsday shield with a massive profit jackpot, then you are not here to gamble on daily noise. You need to grip that main stack during the crash. You can get tactical too. Keep the massive pile safe and trade a tiny slice. This way you will not torch your financial armor just to look like a genius. Next up, someone asked, what signs prove this rally is the real deal? Look for 3 clues. First, check if prices soar even as the dollar tries to recover. That screams a global confidence crisis. Second, do steep drops vanish fast? Third, notice if officials start begging for calm. Because the second they deny the panic, the market senses fear. Listen, I promised you the raw alpha that mainstream clowns miss. So, here is the unlock. This is not just a straight lineup. It is a massive global reset grinding on. And this shift is about the margins. You do not need the herd. You just need smart money to quietly exit for long enough. That is why it is so deadly. It is like a dam about to burst. It looks sturdy right until it snaps. Now, let us track the trigger points. Watch those yields in the States and Japan. The Forex chaos. Look for panic summits and surprise bailouts and listen to the lies. When they all start chanting about stability, treat it like a fire siren because they are never trust them when they claim all is well. That is the exact script used to sedate the masses while they pull something massive. I am handing you a direct battle strategy and we are keeping it grounded. Step 1, secure your financial base. Stack cash, destroy toxic loans, and track spending. Step 2, amass hard assets that you can physically grip during the storm. Step 3, split up your risk exposure. This means checking where your fortune sleeps and who holds the keys. Step 4, stay alert without getting hooked on doom. Staring at disaster daily paralyzes you. Ignoring it all means you get crushed. The aim is cold readiness. Let me be brutally honest. Most folks will only move when the pain hits hard. They stall for empty shelves. They pause for lockdowns. They wait for a breaking news alert to scare them straight. But acting during panic ensures buying at peak cost with 0 choices left. If you are hearing my voice and feel that twisting knot tightening in your stomach, stop doubting. That is your primal instinct sensing truth. Now, realize none of this demands perfection. It is about speed. You cannot time the exact hour of the crash. You must be prepared prior to the shift becoming clear, because when it flips, the herd rushes the gates and the doors slam, limiting you via soaring costs, scarcity, or laws. Okay, brief fun pivot. Since so many of you beg for the killer mindset, not just data, if you crave legendary silver, wins actual proof of those who entered early and built empires, click the link and subscribe to that resource. Linked is crucial. Witnessing success rewires your internal hardware. Regarding the squad, if you are winning, if you scored a win in a market's hustle or life, brag a little in the replies. Your triumph might be the exact push another member needs today. Right back to the economic trap. Tariffs go up, commerce freezes. Trade dies, growth stalls. When growth halts, tax receipts crash. Deficits blow out. To fill the satsako, the void debt printing accelerates. Supply floods, buyers panic, and rates skyrocket. Suddenly, interest payments consume the budget. When the bill comes due, the Fed picks between starvation or inflation. And we know they love the printer. That domino effect is why I view bullion differently. It is not a stock. It is a ballot. A vote against the lie that printing paper solves structural ruin. Now I have to hit the scary topic. Is the greenback dead? Fearmongers love that viral question. Fact is, global currencies do not pop like balloons. They rust. They erode. They lose their grip. Competitors chip away at them. Even if the dollar keeps the throne, it can still turn into confetti in your pocket. Listen, if you are on the sidelines waiting for the official obituary, you are the casualty. The